Well,
So
they definitely figured that out with CMHC in 2015. So for those that don't know, this is something that's a big bone of contention for me. When you are a high ratio buyer, so that is anybody with less than 20% down, you have to have mortgage default insurance. Most people call that CMHC fees. There's three providers of mortgage default insurance in Canada. CMHC was the largest. They are no longer the largest. Then there was Canada, or is Canada Guarantee, which is a private company, and there was Genworth Financial, which has been rebranded to Sagen as of last year. Those are two private competitors to CMHC. But what the point of this was is CMHC would have insurance if somebody defaulted on their mortgage. CMHC or those other two private lenders would pay out the insurance policy based on the losses that the lender, the bank, incurred. So you as the homeowner bought the insurance, but it was actually to protect your lender. Now, CMHC was founded in 1846. Their mandate is to assist Canadians in homeownership. That's their mandate. If you check on their website, it might have that wording wrong, but that's basically what it is. They had in 2015, they've raised CMHC fees to what they are currently today. And their reasoning behind it was that they needed to have more cash in the bank because if there was an issue with mortgage defaults, they wouldn't have the money to cover those defaults. 6 months almost to the day, CMHC announces they have a $2.5 billion dividend to be paid to the Government of Canada's General Revenue Fund. Since 1946, CMHC has never dividended the Government of Canada a single penny. And then in 2015, the government figured out CMHC has a lot of money and they have stripped out, and if you go through and read their press releases, it's probably about 25 to 30 billion dollars has been stripped out of CMHC. So first-time home buyers have been paying taxes in this country basically since 2015 directly to the Government of Canada's General Revenue Fund. So they're going and punishing essentially, the most vulnerable buyers, those that have the toughest time getting in the market. They're punishing them to the tune of billions of dollars to buy a house in Canada. And that thing drives me insane. I'll read the comments here, Bart, and you can kind of jump in on that.
that's the kind of thing that I don't know nearly enough to talk about with any kind of expertise. Just like I wouldn't expect Matt to talk too much about, the Attorney General's office of the Law Society. I would listen to him on that, particularly as it comes to government trying to find new ways to generate revenue without increasing taxes and trying to make it look like they just found the money.
Yep. Yeah, this was one. I understood if they needed to raise fees because they were in a cash vulnerable position, and if there was a wave of defaults, they weren't going to be able to afford it. I'm fine. I buy that argument. But all of a sudden, if you have literally billions of dollars to just give the government of Canada, essentially what CMHC has now become is not an insurance policy, but is a revenue generation tool for the government of Canada. And I just think that's outrageous personally that that's what they have turned CMHC into. And my bigger concern becomes then is that what happens if all of a sudden CMHC does get themselves in trouble and they do need that cash that they don't have? Does the government of Canada now have to bail out CMHC? Which Barlin says we need to stop spending money on or start spending money on innovation entrepreneurs rather than bailing people out. So does CMHC also have to get a bailout? And or does this now, it create a situation where you have banks, lenders that aren't confident that these insurance policies will be paid out and start restricting lending practices? So these are, kind of two issues that really worry me on this subject. So I didn't even put this in the show notes, and now you got me all worked up. So